If you want to take a look inside there today, the action came from Tesla. So Tesla with the gain today, 8%. It was up over 10%. It was the biggest contributor in the NASDAQ today, and soon to be, we'll be able to say in the S&P. Now, here's what I'm going to share with you here today. We're going to get rid of that. I do that every day. I'm sorry, guys. I do it every day. It says it's off. Old Cody and Charlie came to play today. A little round of applause for old Cody and Charlie. Got the good data for us here to share. And you guys know I don't make it a habit of doling out the feel goods there, but today was a really, really good, interesting data point for Tesla being added to the S&P. December 21st, just before Christmas. Nice Christmas present there for old Elon Musk there. It will be the largest company ever added to the S&P there. It'll be around the 7th to 10th largest company in terms of weighting for the S&P, and it's so large that they've actually discussed, maybe they actually reached out to investment professionals to see, should we add Tesla in chunks? Meaning don't add it all in one day. Maybe we add it over a period of time. So that's up for discussion at the moment. And I'll let you guess what sector you think Tesla is going to be in when it gets added there. Nonetheless, let's go over and take a look. I've got some cool stuff to share with you here today. I'm just super excited about this. We look over at Tesla, 8% day today. When we looked at this, it was up over 9%. We said, well, how many times does it gain 9% any day there? It's actually gained more than 9%, 51 days since its existence there. And this year has a record. 18 days this year, Tesla has gained more than 9%. 9% or greater. That beats the last year, which was 2013. And what we did is we said, hey, last time it had 9% gains so often in a year, was the next year weaker? Was it a down year? It was not. Actually, in 2014, Tesla gained 47.85% there. So we've got a record brewing here for Tesla. Can it get to 20 days before the end of the year of being up 9% or more? Today doesn't count. So 18, we weren't up 9%. So it's still 18, but that just gives you an idea of how volatile and actionable Tesla was for the year. Here's what I wanted to do. We took a look at stocks inside the S&P and said, well, how do they perform once they get added to the S&P or removed? You may know that I did this for you in the Dow when CRM was added back in the day. Let's go through it. This is all that cool data, man. I love this stuff. Here we go. Short-term performance when a stock is added to the S&P. Here is the last 10 stocks to be added to the S&P. We've got a whole bunch of them. We don't have to go through them individually, but if you look at the one-day performance, there's really nothing to get excited about there. The day they get added to the S&P, the performance tends to be a little bit negative. Average losses of about 0.25%, median about 0.75%, and almost never is it positive. Domino's Pizza gets to be one of those. Etsy and Pool Corp, which was the most recent one that we talked about that was added, the only ones to be positive. Otherwise, there's a little bit of selling pressure on the day they're added to the S&P. A week later, it gets a little bit better. So as they start to get bought into the major index ETFs, funds, and things like that, the average performance, 1.5%, median performance, basically flat. We've got a better positivity rate. And as you go over to 1 month, they all turn positive. So what that tells you is there's a lot of volatility in that initial short-term stretch, but they all eventually start playing along. I should also mention these are all added this year, and naturally since that March 23rd low, the markets have been higher, so a little bit of a tailwind there. But in the case of the last 10 of them, average gain 9.5%, median 8.8. That's nothing to sneeze at there. And every single one of them were positive when added to the S&P 500. Let's hope Tesla does the same thing, huh? If you look at the stocks that have been removed from the S&P, it's actually not that bad. Now, we don't know which stock is going to replace Tesla just yet. That'll be announced shortly. But here's all the stocks that have recently been booted from the S&P, at least this year. And you've got one-day performance averages a small gain. So when they're kicked out, that doesn't mean a crash. Doesn't mean the end of the world for those stocks. Positivity rate, 62%. 1 week later is the worst time period for getting booted from the S&P. That's probably a little bit of selling pressure as everybody makes their adjustments to the new position that was added and sells off what they don't have to have anymore. Median loss, 4%, and almost never positive there. Just a couple stocks made it through unscathed there. If you look over the next 1 month, it's basically back to business as usual. Stocks that get booted see a little bit of pressure, and then once the kind of coast clears, the stock is able to go back and perform as it was going to perform, hopefully better over the next month. 75% of the time positive, but better gains over a 1 month period than when you get added to the S&P. So there's a on average, there's a larger profit to be made when you get booted versus when you get added. Thought that was interesting there if you want to take a look. We then plotted the performance going forward for all the stocks that were added to the S&P. Naturally, they haven't all been there just as long there. It's a bit of a hodgepodge of a mess if you want to look at your charts, but basically it's showing you that in the first month, I mean, what is that? What are you supposed to do with that? I don't even know how you explain what's going on there. Anyways, it's a big mess, and then as that adjustment is made, you tend to see things getting a little bit smoother going forward. So Vivint, you've got Pool Corp in there, and Etsy as well, still have room to start smoothing out. Those are the most recent ones if you've taken a look at that chart there. If you look at the stocks that got booted, removal from the S&P does not mean that these stocks are going to crash. In fact, none of them do. So they have slight negative returns in that first 1 month period. You can see it's awfully messy, a little bit kind of not exciting there. Some of them drift a little bit lower on average. They drift a bit higher as more time passes. Gives them a chance to recover from everything that's happening there. And I thought that was really interesting. Just a really cool piece of data. I can only tease you guys with what we're building here in the background there. So there you have it. That is what it means, and that's going to happen every time. I don't know. I don't know what to tell you. It's broken. The button's broken. That's my fault. But anyways, that's what it means when a stock gets added to the S&P. If you look back a couple weeks, we did one when in October, we did this what happens to stocks in the Dow when they get added to the Dow or removed from the Dow. So hopefully that helps you and you learn something from it.